Let's continue with our discussion of the competency market interpretation. Specifically, we're focusing here on marketing strategy. Part of marketing strategy is to understand your organizational mission because your marketing decisions need to support your organizational mission. Entrepreneur Magazine gives some definitions or descriptions of your organizational mission. It says it's a few succinct sentences that capture the essence of your business's goals and the philosophies underlying them. A mission statement signals what your business is all about to your customers, employers, suppliers, and the community. The organizational mission reflects the range and nature of your products, your pricing, your quality, service, marketplace potential, growth potential, use of technology, and your relationship with key stakeholders. It seems like a lot to put in a few succinct sentences. Mission statements help to clarify what business you are in, your goals and objectives. Let's look at a couple examples. Me Johnson Nutrition says, to nourish the world's children for the best start in life. FedEx's is a little bit longer, still a few succinct sentences. They say they will provide superior financial returns by providing high value added logistics, transportation, and related information services through focused operating companies. Customer requirements will be met at the highest quality manner appropriate to each market segment served. FedEx Corporation will strive to develop mutually rewarding relationships with these key constituencies. They mention safety and the highest ethical and professional standards. So the foundation for all of your marketing strategy should be your organizational mission. One of the things that you'll probably want to do early on is to do a situation analysis. And the American Marketing Association defines situation analysis as the systematic collection and study of past and present data to identify trends, forces, and conditions with the potential to influence the performance of the business and choice of appropriate strategies. It's the foundation of strategic planning. The situation analysis includes an examination of internal factors, we would call those strengths or weaknesses, and external factors to identify opportunities and threats. So in a way, a situational analysis looks at the marketing environment and the inside of your business to develop strengths and weaknesses when it looks at the inside of your business, and opportunities and threats when it looks at the marketing environment. Let's look at a college, for example. Internally, it would look at its strengths and its weakness. So one of its strengths might be its smaller class sizes, while its weakness might be in a location or a town where students aren't interested in living. If we looked at the external environment, an opportunity might be a nearby competitive college closing, or a threat might be concerns in the social environment about the growing amount of student loan debt. So strengths and weaknesses are things that you can work on inside your organization, and opportunities present either opportunities or threats to your future sales. I'd like to discuss the Boston Consulting Group Growth Share Matrix. And here what we're going to do is look at a matrix where on one axis we put market share, and we look at market share as being either high or low. And on the other axis we look at the potential growth of that market, the market potential. And we look at whether that growth is high or low. Now this is particularly helpful if your business is going to be selling more than one product. It's still helpful, obviously, if you're only selling one. But if you sell multiple products, and you have to decide where to allocate your resources. This helps you to look at what products or product lines within your company should get the greatest resources. So what the Boston Consulting Group did was to come up with a um, 4 quadrants here. If you are manufacturing a product that has a high market share and a high growth potential, you have what's called a star. This is your shining star. You've got a high market share in something that's growing. It just doesn't get much better than this. So if you were to look at something like the iPad in the tablet computer market, Apple has a high share and it's a high growth market. Down here in the opposite quadrant, if you have a low market share in something that has a low growth rate, that would be your dog. There's not much use in investing much money in that product line or product item because not only do you not have a huge market share there, but there's not expected to be much growth. Let's look at something where you have a high market share in, but there's relatively low market growth. So a company, for example, like Kodak with its traditional photo printing booths at stores, that would be considered a cash cow. There's not a lot of growth, so you don't want to invest a lot, but you don't want to just not do any investment at all because as long as there's still a demand, you have a high share. So you can continue to milk this cow as long as the market exists. A question mark is an area that you have a low market share in, but there's high market growth. And what you want to do here is if you can invest some resources to move this over to a higher market share, then you can move this question mark into a star. The problem here, you've got some competitors who have a high market share. They have some stars in this area. And so you have to ask yourself, can you get some of this stars market share? So the Boston Consulting Group Growth Share Matrix simply allows you to figure out where to manage resources in your portfolio of products.